Bismillah Rahman Rahim. I am Shakil Rame, and you are watching Political Economy with Shakil Rame. Viewers, the world is going through the different types of the crisis. We are facing different types of the problems, including food insecurity, high poverty, climate change, environmental degradation, and education. So millions of the kids are out of school. However, I feel there are more deeper crises which we don't discuss much. There are different factors which are causing these all type of the challenges for the humanity. But those challenges are not being discussed at the global forums or some TV channels or other places. They remain on the back seat. In this context, today we have requested Dr. Andrew Samad. He is a famous economist. He is the director for the Scheller Institute, USA and Latin America. And he is also the editor of Economic Intelligence Review, a weekly magazine. So he has a very keen eye on the subject, what we want to discuss today. We want to discuss today two things broadly. Number one, what is the debt crisis? Is Pakistan is only suffering or the globally? The whole countries are suffering from the debt. And what are the dimensions of that debt crisis? One thing and second thing, from where it originate, the financial system? If yes, then who controls the financial system? And why the problem is not being solved? Welcome, Dr. Andrew Small, to our program. Now, we will start with the first question. When we look at the debt crisis, it is not the talk of the one country and the other country. Globally, I was just looking at the figure. So it has crossed the 3 trillion. Oh, sorry, 300 trillion.
300
It's a
trillion.
huge amount. So what is the exact amount of this our debt, global debt, and why it is happening so? And I have seen the trends in the recent past. It is increasing very fast.
Yes, absolutely. Well, thank you very much, Shakil. It's a pleasure to be with you. And if I may, and if we have time, I'd like to add a third theme to this discussion, which comes naturally, which is
Sure,
after
sure. Please go
analyzing
ahead. Please go ahead.
both the cause and who is behind it, of course, the solutions, since that is what we're all interested in. Um, I think the debt crisis is usually underestimated because the problem is not the debt. The problem is the derivatives trading based on the debt, which is one order of magnitude larger than the debt itself.
Can you little bit explain what is the derivatives? Because our audience, most of the time, they are not very technical. They want in the layman language.
Well, the technical people are the ones who understand it least, so don't worry. Uh, Derivatives are crazy. There is almost no way to understand it. It is betting, speculating on non-existent, physically non-existent aspects, and it is betting on the future performance of non-physical aspects. For example,
Oh,
you make a bet, a derivative bet on what the future performance will be of interest rates in one economy in relation to another. Or you make a bet based on the foreign exchange rate. Those are the two
mm.
major areas of derivatives between two economies. Let's take Pakistan and the United States. And then, of course, the people making all of those bets in turn manipulate the exchange rate, manipulate the interest rate to make sure that they make a killing on the differential. This is a
Okay.
purely speculative bubble. And I think it
Mhm.
might be helpful if I show from the very outset a graph which indicates the magnitude of the problem here. Hopefully on the screen in a moment, you
Yeah,
will
we
be
can see it. I think that's a very nice graph.
very good. This is a graph which shows the total financial aggregates. In other words, the entire financial speculative bubble. And I've included three main components. First, in yellow, is the size of all of the stock markets, the market capitalization of all the stock markets everywhere around the world. And you can see it's proportionally not that large. The next significant component is the debt, which we were just talking about in green. This adds up to, at this point, a little bit over $300 trillion. When I say debt, I mean all kinds of debt: public debt, private debt, consumer debt, corporate debt, personal debt, government debt. Every kind of debt in the entire world is about $300 trillion. And you're very right to point out that this has been increasing very significantly. However, if you look at the size of the derivatives bubble, which is in red in this graphic, you can see that we are talking about something at this point which is over $1.5 quadrillion. Now, just so that there's no confusion, quadrillion is, in the total amounts here that we're looking at, 2 quadrillion. It's a 2 followed by 15 zeros. It can't be paid. It's a speculative bubble which is completely impossible to pay. It only grows and grows, just like the tulip bubble in the past or any stock market bubble. But here, derivatives are about 80% of the total. So that when you look at the whole issue of the derivatives in relationship to the other aspects, you can see that it's far more significant. Now, I'm going to show you another graph here, which I think gives an idea of the size of the real debt bomb, which is the question you were asking. And I can tell you that I drew this to scale as close as I could with my resources at hand. People often talk about the federal debt of the United States, which is enormous. I did this graph a few months ago. It was only 34 trillion then. It's now about 37 trillion. And as your
In a few
listeners,
months, in just
yeah,
few months,
oh
that's a
yeah,
very alarming. So it's
yeah,
why is, I will come back to this question, but it's very alarming.
yeah. It's growing by like a trillion a month or two. It's completely out of control. There's currently a government shutdown in the United States, supposedly over this budget. But you can see that the size of the federal debt, which is the little explosion in the middle, is only 34 trillion. The world debt, this was again a few months ago, was about 310 trillion. It now is maybe 320 or more. That's one order of magnitude larger. But the derivatives bubble is 2.1 quadrillion. So the big problem that we have is really not simply the debt, or certainly not the federal debt of the United States, except that one triggers the other. So we're talking about an integrated process here, but the problem is much, much bigger than most people care to talk about. Now, I want to go back to this original graph because it shows, if you look at the history of this, it starts to give us an idea of why this grew the way it did. You can see back in 1999, which is the first vertical line there, the amount of derivatives or debt or stocks was not that huge. I put the date of 1999 because that is a very important date in world history. That is when the Glass-Steagall legislation of the United States was revoked. Now, Glass-Steagall, for those unfamiliar with it, was a law which was established under the presidency of Franklin Delano Roosevelt in the 1930s, which was very smart. It said, on the one hand, you have commercial banking, productive banking, lending for industry, for agriculture, for purchases, the real economy. And on the other hand, you have so-called investment banking, speculative banking. And under Glass-Steagall, no bank could do both. There was a Chinese wall between the two. And the Glass-Steagall legislation had established that
So
the
they
federal,
made it clear. So no speculation should influence the real market or the real economy.
exactly, that's what Glass-Steagall
Mhm.
was. Now, incidentally, prior to the lifting of Glass-Steagall in the United States, the equivalent thing happened internationally in 1971, because that was the year in which President Nixon announced the end of the fixed exchange rate system and moving into the floating exchange rate system. He also separated the dollar from the gold reserve standard, which was an important aspect, but secondary. The main thing that he did, not him, it was his advisors. He just did what he was told to do. George Shultz and some of the top bankers were the ones who decided. And instead of a fixed exchange rate system among currencies, which made
You are
it,
seeing here, he was influenced by the private bankers.
oh, yes, absolutely. His Treasury Secretary, John Connolly, worked for and with the private bankers like George Shultz and top policymakers connected to British intelligence and financial circles that are far
Oh,
more influential in the United States than most
I
people
think that
realize.
one question needs a lot of understanding and a lot of time, but we will move forward quickly because our
Sure,
topic is to something else.
sure. The So what happened was in 1971, when the floating exchange rate system was done, the predictability of the international economy, which at least was a basis for trade, predictable trade, no floating exchange rates, investment. If you're in one country and you want to invest in another for 20, 30 years to build up capital, no problem. You know what the exchange rate will be within a margin of fluctuation. With floating exchange rates, it opened the doors completely to wild speculation. Because then what happened is through financial manipulation, which Pakistan is all too familiar with, you get financial warfare, creating capital flight. There's free convertibility from the local currency into the dollar. There are floating exchange rates, and all of a sudden, all of the capital in the country gets sucked out. That's financial warfare.
Even I think the IMF and the World Bank, these are a financial institution. They force the country, especially which are working with them, having some loan or something like that. So their reform package carry it a special, a special note on that. Go for the open exchange rate.
Yes,
Mm.
the IMF and the World Bank, but especially the IMF, functions as the policeman for the banking system centered in London and Wall Street. And when they impose a reform package, the argument is always, well, you have to open your doors so that you can get all of this capital coming into your country. If you want foreign capital, you have to open your doors. And they force a country to open its doors. And what happens? The money doesn't come in, the money goes out. That's what
Yeah.
happens under free trade and floating exchange rates. So the entire
Another thing is the
system,
hot money. Sometimes, so that there's some speculative market workers, they see any market, so they go for the hot money. Just
yeah,
money come and money goes back.
yeah. And today there's a very curious phenomenon going on with so-called hard money or the flight to quality, which I'll come to in a minute, which is cryptocurrencies and stable coins and so on, which is a gigantic fraud perpetrated by the banks. But you can see in this graph that I have on the screen that at a certain point after the derivatives rose so dramatically in 2007, we all recall the so-called recession. It was a crash, and the entire system almost went up in smoke. But what happened is that by pressure of the Wall Street banks, the Federal Reserve, and so on, and pressure on other countries, the United States government came in to bail out the banks. Previously, under Glass-Steagall, there was something called the FDIC, the Federal Deposit Insurance Corporation, created by Glass-Steagall, which said the government backs the bank deposits of individuals and companies for production. When you get rid of Glass-Steagall, the government is left backing the speculative bubble. And all of a sudden, the government is in charge of saving the cancer. So that's what happened in 2007. The United States government, Brussels, Bank of England, Bank of Japan, all jumped in to bail out this 1.5
That's mean,
quadrillion
that's
speculative
mean
bubble.
there was a problem Instead of fixing the problem, the state come forward to strengthen the problem.
Yeah, and let me show you how this happened because you can
Hmm.
see now this is at 2.1 quadrillion. Here's how it happened. This is quantitative easing. Quantitative easing is when the Federal Reserve issues and pumps massive amounts of money, funny money, no backing, into the economy to help the banks, supposedly so that they could make loans and get the real economy going. And you can see between 2007 and 2021, the total amount of quantitative easing reached $27 trillion by the Federal Reserve and the ECB mainly. Now, at that point, quantitative easing, the rate of increase of money pumped into the system, no longer was working to keep the speculative bubble afloat. And I should clarify that, contrary to the arguments from the banks and the Federal Reserve, that 27 trillion, which was supposed to go to the banks so that they could lend to customers, was not lent to banks, to the customers at all. Zero.
Oh,
We've done calculations on this. The bank lending portfolio actually fell during this period. So all of the money went for the cancer, for the speculative bubble. Now, when this stopped working, because it wasn't growing fast enough in 2021, these geniuses came up with another idea, which was even worse than the original idea, because this idea of quantitative easing just fed the cancer. Shakil, it's like if you go to a doctor and you have cancer, and the doctor says to you, well, what we're going to do to help you with your cancer problem is we're going to make sure that the cancer keeps growing. So I'm going to give you medicine to make sure the cancer grows.
And
And
by the way, in the modern medicine, all the companies work on this philosophy. So they make you the customer, so they don't have any cure. Anyways, go ahead.
no, exactly. In fact, the medical field of cancer for doctors is called oncology. And
Mhm.
I've often thought that the modern school of economics should really be called onconomy because it's simply feeding the cancer. That's all that it does.
Mhm.
So
Mhm.
you tell me if you're a cancer patient and your doctor says, we're going to strengthen the cancer, you would probably be smart to fire the doctor
Of
and go
course.
find an actual physician who knows that if you have cancer, what do? You either have surgery to get rid of the speculative cancer or chemotherapy to get rid of the cancer and strengthen the healthy tissue. Well,
Yes,
that's
of
already
course.
talking about solutions, but
Mm.
so what happened after this, Shakil, was the following. And this is, I think, going to be of great interest to people. You can see here crypto had begun to grow from 2021 to 2025, and it's still just 3, 4 trillion. The projections of the major banks, Standard and Chartered, and other policymaking banks, is that over the next 4 or 5 years, crypto and stable coins, which is a category under crypto, will grow between 100 trillion and 200 trillion dollars over this 5 year period. And this is
So
what it's going to look like.
it means instead of fixing the problem, a cure or to treat the cancer, they are introducing a new disease.
Yeah, absolutely.
They are
This is,
planning a brain hemorrhage.
yeah, and you can see the proportions here. Now,
Yes.
crypto is even worse than quantitative easing because quantitative easing is issued by the central banks of different countries, and at least the government is supposedly responsible. In the case of cryptocurrency, we've returned to feudalism, where the currency is issued not by a government, a bad one or a good one, it's issued by private interests. As we say here in the United States, any Tom, Dick, or Harry can issue cryptocurrency, especially if they're a big bank. But the problem is, what if they cannot make their payments on those cryptocurrencies, as has happened? They go bankrupt. there's nobody to collect from. You can't go to the government. You can't collect. Go try to find Tom, Dick, or Harry and collect. And
Ah,
so what's being created is a speculative bubble, not even by governments, but by any private interests that care to get involved in this. And this is a formula for a complete and total disaster. And we are heading towards a breakdown collapse of this
it's
system.
not. It's not. So I just what you are telling me. So I was just thinking about in the late 19th century and early 20th century in the US when the banking was there, a terminology cat banks. So the bank opened, they defaulted, and nobody know where the money have gone.
Yeah, and that's exactly what's going to happen. Cryptocurrency, which is being sold as something that gets rid of big government and it's only transparent private interests that are involved, is the biggest hoax in the world because the people controlling the
Mhm.
large cryptocurrency markets are major players such as BlackRock, such as Goldman Sachs, and they're the ones that are going to fleece, steal from all the poor suckers who get pushed into this because they're greedy. The latest news on the financial markets. First of all, cryptocurrency or the Bitcoin, which is one of the main cryptocurrencies, has gone up to about 120, $125,000 per Bitcoin, in part because the Trump administration is pushing it. But they're forecasting that a single Bitcoin will soon be worth $1 million. Now,
Oh.
what's backing this? Absolutely nothing. The physical economy of the world is collapsing, at least in the West, not in the Belt and Road Initiative countries, not in the SCO countries, not in the BRICS countries, not in Asia, not in the East in general. But in the transatlantic sector, it's completely falling apart. And you have a situation where even with the banks, here, this is one of my uh, favorite graphs. A colleague of mine once said derivatives are like a tick on a dog, which is a parasite. The tick sucks the blood of the dog. Except if you consider that the dog is the size of the financial assets of the bank. In the case of the United States, this is about a year and a half ago I did this, $8 trillion in assets. The derivatives of the major banks are $173 trillion. So you have a tick which is 20 times bigger than the dog which it's sitting on. Now, that does not promise a good future for the dog. And if you want to ask, well, what's happening in a country like China? And these, by the way, this picture is again to scale. The derivatives is about, that tick is about 20 times bigger than the dog in area. If you look at China, this is China. The size of the assets of the banking system are about 19 trillion. And yes, there is a derivatives problem in China, but they have it under control. It's only 7 trillion, a relatively small tick. These are the top four banks of China, the top four banks of the United States. So you can see what the nature of the problem is. There have been speculative bubbles that have appeared periodically in the case of China, but they have them well under control.
But
So you can see the problem.
when you look at the Western media, I think they reverse the picture. So what you have shown for the West, they will show for the China. So they reverse
Yeah,
the whole scenario. They present like that. So China is collapsing tomorrow due to the debt and the assets management and every these things. I think what
right.
there
And
is a very interesting. Yes.
they make up the whole story of the debt trap also as part of that to say, oh, countries in Africa are falling in the debt trap of China. A complete
Mhm.
lie. They're falling in the debt trap of Wall Street in the city of London.
And City of London.
Yeah,
Before that, going to the next point, I just want you to little bit explain on the City of London. What is City of London? Because most of the people who don't understand this terminology and the system, they may think that London is the City of London. So you can little bit
yeah.
tell. So what is the difference between the London and the City of London?
Well, the city of London is the name that's given to the financial district of London. It's called the City of London. And it actually has its own government on top of everything else. But it
Mm.
is Fleet Street, it is the central financial area. And it has long been the contention, and we have proven this, of the LaRouche movement, referring to Lyndon LaRouche, the famous US economist who passed away a number of years ago, but who was the founder of the Schiller Institute and Executive Intelligence Review magazine that I work for. He documented and demonstrated that the policy decisions and the control are still made in London, and in particular the City of London, and Wall Street is a policy branch of the City of London. This was stated most famously by Henry Kissinger when he was Secretary of State of the United States. In 1982, Kissinger gave a speech to Chatham House, the Royal Institute for International Affairs of London. And he stated openly, when I function as Secretary of State and at the National Security Council, I have my first discussions with the Foreign Office and figure things out, and then I talk to the State Department and people in the United States. So the policy, the thinking, the terrible ideas, the imperial ideas behind the system are British. And if you look at all of the major world markets, their center is in London. The gold market, it's centered in London. The raw materials markets, centered in London. The derivatives markets are centered in London. So Wall Street plays a very important role, but from a policy standpoint, the actual decisions are made in London, and then their assets and interests and followers in the United States, which are very powerful, but not the entirety of the political situation in the United States, tend to follow suit. So that's what City of London refers to.
Okay. And there is a question. So before moving to the next point, okay, who is controlling, a little bit we have discussed in the cryptocurrency, because that is a new, you can say the buzzword these days. Everybody is saying, oh, cryptocurrency. If tomorrow, if the private companies can start, if tomorrow some terrorist organization or money laundering organizations or the organized crimes organization, they issue their own cryptocurrency, then
Exactly. And in fact, I would say that's already occurring because if you look at the international drug trade, organized crime, it's a business according to our estimations, and we have followed the drug trade very closely for decades. It's a business that the street value of all of the drugs produced is approximately $1 trillion. Now, that money is laundered through the financial system. The drug trade is not run by the producers or the consumers. The drug trade is run by the large financial interests that benefit from it. It's exactly like the opium wars of the 19th century. If you look back to the Opium Wars, which was a military and cultural war against China, against India, against Asia in general, it was run by British imperial banks such as Lloyd's, Standard and Charter, and so on. Today, the international drug trade is again centered in London, and the offshore banking centers, which are free of control, which are largely British Commonwealth centers. Cayman Islands, for example. It used to be Hong Kong. Hong Kong is no longer British. Hong Kong is now Chinese, thank goodness. But the bank, which used to be called the Central Bank of Dope Incorporated, the international drug trade, was the Hong Kong and Shanghai Banking Corporation. Now it goes by the name HSBC. And it is no longer centered in Hong Kong. It's centered in the City of London. Now,
mhm.
HSBC is not a minor player because there were investigations in the Senate of the United States in the year 2012, I believe, in a Senate committee headed by Levin, Carl Levin, in which it was documented through testimony and so on that HSBC Bank had been caught red-handed laundering about $60 billion of money from the Sinaloa cartel in Mexico. Now, that's just the tip of the iceberg, but that's what they caught them doing.
Mhm.
And they gave them a very small punishment, just a fine, a little slap on the wrist, and they said, naughty, naughty, don't do that again. But they did prove
Yes.
it. Now, when the Attorney General of the United States at that time, under Obama, Eric Holder, was asked, Mr. Holder, why don't you prosecute all of the banks, because it's the big Wall Street banks that are involved in drug money laundering? Then we could deal with the drug problem. And he said, oh no. And he did this in a letter. It's public. It's called the Holder Doctrine. He said, oh no, we can't do that. If we did that, we would bring down the entire Western financial system.
Oh
So
my
these banks
goodness.
were
So
not,
that is the spectrum of the problem.
yeah. So
And the
when you say
control
that
of
what,
the control of these drug dealers on these banks. So they are
yes,
feeling the total collapse.
exactly. They need this money, the drug money, to stay afloat. This is not just our publications would say this. This was stated by Antonio Maria Costa, who was the head of the United Nations Office of Drugs and Criminal Activity
Okay.
about 15 years ago. He said that. The
Mhm.
only thing that kept the banks going after 2007 was drug money laundering. So when you ask what happens if criminal enterprises get hold of cryptocurrency, I have to say, Shakil, it's already happened. That is who is behind it. So we
So it's
have
a
a
will,
big problem.
yes, it will further strengthen it. So in this context, you have shown and you have told us. So who is control? What is the level of the debt, and who is controlling this financial system? So what is the solution in this
Well,
context? No, because know the problem, who is causing this problem. So what is the solution?
yeah, this I'll add one feature to this just to make things a little more clear strategically. Besides the financial bubble and besides the drug problem, I want to include the military side because the
Hmm.
cause of the wars we are seeing today, whether it's Gaza or Ukraine, the NATO war against Russia in Ukraine, or the genocidal war going on in Gaza today, the ultimate cause of this is the breakdown of the financial system and the need to maintain control because of this debt problem. Now, President Eisenhower of the United States famously talked about the military industrial complex, and that was very appropriate. But today, we really should talk about the military industrial financial complex because the principal uh, military companies today are actually controlled by Wall Street, by these same financial interests. I've put a chart on the screen. I hope it's not too small to see. But what this shows is the six top military contractors: Lockheed Martin, Raytheon, Northrop Grumman, Boeing, General Dynamics, L3 Harris Technologies, names that are very familiar. But if you look at what the number one and number two stockholders in those companies are, in other words, the people that own them, you'll see that the stockholders are State Street, it's a big financial corporation, investment
Mhm.
management, BlackRock, infamous internationally, Vanguard Group, and so on. And if you look down the list, State Street, BlackRock, Vanguard Group, State Street, Vanguard Group, BlackRock. And you can
Okay.
see the size of these companies. BlackRock has $9 trillion under management. So when you look at the budget of the United States government, we have about a budget of $6.5 trillion every year. $1 trillion goes to the military budget. 15% goes to the military budget. So it's taxpayers like me. I live near Washington, D.C. We pay our taxes to the government. The government purchases $1 trillion in military equipment and personnel every year. And where does that $1 trillion go? To Wall Street, to BlackRock, to State Street, to Vanguard Group. There's another $1 trillion item in the United States budget, interest payments on the debt, $1 trillion. So
Maybe we
15%,
have it increased now.
it's increased because of the interest rates rising, and the debt is going up because we have a deficit. The
Mhm.
reason we have a deficit is because 15% of the budget goes to the military, 15% goes to pay the debt. So what you're left with for people's needs, for schools, for firemen, for Social Security, that's smaller and smaller. We get the treatment that the IMF gives to a country like Pakistan. We're in the same boat. So that's the nature of the problem here. Now, to the solution, which was the question you were asking. I like to first give a sense of the magnitude of the problem because it's really bigger than most people see, or have been received the information to understand. But it's important to understand how big it is to be able to come up with a solution. Because if you come up with a small solution, it's not going to work.
Mhm.
The four leading banks in the United States that hold 98% of all of the derivatives that we were just discussing. There are four
Mhm.
banks that hold 98%. JP Morgan, number one, Citibank, number two, Goldman Sachs, number three, Bank of America, number four. These
Mhm.
aren't banks. They are machines of speculative activity. So, what needs to be done? Well, we have a system in the transatlantic which is bankrupt by all legal and physical economic standards.
I
We
just
have
I
a
want
bubble.
to add one more thing here, and I want your comment. I was just looking at the Bank of America. So it is being run through the board, and the Bank of America they decide the monetary policy. Father the Federal Reserve. Sorry, I mixed it. Please go ahead.
Yeah. Yeah, yeah. No, the Federal Reserve. And now there are changes going on in the Federal Reserve. But people should understand that the Federal Reserve is not a national bank run by the government. The
Yes,
Federal
that's why my
Reserve,
question. A board of trustee.
exactly, the Federal Reserve are private bankers. The Federal Reserve may be nominated by the president, but they come through the regional Federal Reserve banks, which are themselves expressions of the regional private banks. In the United States, we no longer have a national bank. We used to, back with Alexander Hamilton under George Washington. We used to, under Lincoln, when we had a national bank, which could serve the interests of the nation to channel credit for productive activity. Now we have this so-called autonomous central bank, which doesn't mean that it's autonomous. It's only autonomous of control by normal people. It's run by the cancer, the board of directors deciding the policy on monetary and credit matters in the United States and in Europe, and the Bank of England and the Bank of Japan are the owners of the cancer. So that starts to tell you what the answers are.
That's the policy influence you were talking about. So the scenes are being made in the city of London, but the policy influence comes from the US.
Well, it comes from the big financial interests. So
Mhm.
it's both the United States and the City of London. This is actually a supranational apparatus. They don't have any national interest, really. They don't particularly care because they function that way. Now, in terms of the solution, Lyndon LaRouche proposed four policies, four laws to address this problem. And I'll go through them quickly because they all go together. It's not one by one. The first is return to Glass-Steagall. That means that banks should issue money only for credit for productive activity, and all of the speculative activity should be frozen. It should be put through a policy of bankruptcy reorganization. You take the 2.1 quadrillion and you freeze it. No payments. It's like a debt moratorium. And therefore, you have a banking system where the cancer is set aside and you go through it item by item to see what's a valid debt and what's purely speculative. So that's point
Okay.
number one. If you do that, you are going to need a new flow of credit for productive activity. So what you do, it's like putting a when you have surgery to remove a cancer, you have to have a life support system.
Mhm.
So what you do is you create a national bank to issue credit for productive activities. You channel credit not to speculation. You have a prohibition. The money is channeled not to speculation, only to productive activities.
To
Invest.
industry, to agriculture, to
You've got it. Exactly. So you have a new source of non-speculative credit, and the old credit gets frozen. It's only going to hurt a few thousand bankers. It will not hurt the economy.
Mhm.
That's number two. Number three, you then have to set up cooperative agreements with other countries for investment in great infrastructure projects and the kinds of things that actually increase the productivity of the physical economy. The perfect example of this is the Belt and Road Initiative, because that's exactly what China does. It has agreements with other countries that are mutually beneficial, and credit is channeled largely through China-based institutions. To a little degree, the AIIB, to a very little degree, the New Development Bank of the BRICS. It should be much bigger, but that's what the Belt and Road Initiative does, and it creates investments of credit to projects which are mutually beneficial to all the countries involved. And they are big projects. Here in the United States, we look at what China has done, and if you're not prejudiced, you say, my goodness, they have 40,000 kilometers of high speed rail going towards 50,000 kilometers of high speed rail. Do you know, Shakil, how many kilometers of high speed rail we have in the United States?
I think zero.
Yes, you're right. Zero. Zero. They have one route which says it's high speed from New York to Boston, but it's a line which is shared with slow trains. So
Okay.
the high speed trains, which are not very fast anyway, don't go high speed,
Just just to keep yourself satisfied, we have some high speed.
which is ridiculous. We can't even build high speed rail in the United States. To be able to do that, the United States needs China's help or the help of Spain, which incidentally has very
But
good technology.
it is very unfortunate because in the 50s and 60s, US was leading in the highways and the rail and everything.
Sure, up until the assassination of Kennedy, the United States was the leading economy of the world. And now our GDP has grown, but the part of the GDP that has grown is speculation. It's not productive. You can have $100 million in prostitution and drug trade, both of which are counted in GDP, but that's not the physical economy. That 100 million is not the same as 100 million invested in steel or high-speed rail. So we, the United States, must cooperate with the Belt and Road. And that is the policy that Mr. LaRouche has proposed, and we continue to insist on it in the United States today. So that's the third point. The fourth point is a broader, maybe philosophical one. It's scientific, really, and that is the idea that the motor of the economy that pushes investment of credit into productive areas is advanced science and technology. The motor force of an economy is advances in technology and science, and therefore we must invest in fusion power. We must invest in space exploration. We must invest in advanced biotechnology because those areas of investment may not produce an immediate product today, but they produce productivity, which is more important. So if you put those four laws together, you have a policy approach which we in the United States have
And
argued.
what the state have done, so they reverse the process. Instead of promoting the fusion, So they started to put a ban on the nuclear fusion.
Yeah, exactly. And if you look at the policies of the Trump administration today, maybe the worst thing happening with his budget policies is not even cutting Medicare and Medicaid and Social Security, which is terrible because older and sick people won't have any way to live. Even worse in terms of the future is the drastic cutbacks in the funding for basic science to the National Institutes of Health, the National Cancer Institute, NASA, and so on. Today, the leading economy in the United States, in the world, is not the United States, it's China. If you measure that the way you should by physical economy and not speculative values such as GDP. So the big problem, and I'll show you a graph on this, which Mr. LaRouche always used to explain the nature of the economic crisis in the West, is what he called the triple curve. And what this shows is the two upper curves is you have financial aggregates. That's what I showed in the original curve of 2.1 quadrillion. This is just a pedagogical indication. It's not real numbers. But the rate of growth increases of financial aggregates under speculation. Monetary aggregates to maintain the speculative financial aggregates grow at a certain point even more rapidly. But the physical economic output, the physical economy, which we live by, we don't
Mhm.
live on crypto. We don't live on the stock market. We live with food. We live with steel. We live with energy. That physical economy has been collapsing. And you do not have to be a rocket scientist to know that sooner or later, this triple function leads to a breakdown collapse. And that's where we now are, in that
Yeah.
kind of collapse, which raises the question of how do we solve it?
And then instead of fixing your problem, so the US politicians and administration, successor, not only Donald Trump, they have decided to fight with other countries, to put a trade wars, to financial wars, to buy barriers and everything. I think that is not a sustainable solution. There are a lot we can discuss, but due to the time, maybe we have to organize another session on the subject where we can discuss it. But in my mind, when I was listening to you, so the one or two things which were coming to my mind, the derivatives. I
Mhm.
think that all the government have to give a priority, the deal it with it, and find an alternative, how to control it. One thing and second thing, I think when I look at the Islamic economic system, where they don't believe in these derivatives, no interest rate, riba. So they
Mhm.
say go for the cooperative partnerships. What they want to do, if you have to lend, go for the cooperative, put your efforts. Don't make it easy because if you start getting money from the money, it is a greed which will increase with the time. And that happened in the US with the Stiegel law. So once the law is gone, so derivatives rise, the banking system taking over the production system, financial system has taken over the financial production system. I think maybe, as you said in your discussion, we need a deeper look into the challenge. We maybe need sustainable and long-term solutions rather than just find the one or two solution here and there or then celebrate as a great model. I think we have to
Mhm.
look for the greater solutions. And one option which you, Lender Roche, that was representing the food law, can also be integrated under this big picture. Thank you so much, Dr. Andrew Small. And I think our viewers will get the insight what is really happening, and the world is moving, and especially the cryptocurrency part, because this is a buzzword and the many people adore it. They say, oh yes, it's a wonderful, fantastic, go for it, but they don't understand the science behind it. Maybe we need a 10 and 50 minutes more some other day on the cryptocurrency, and it's a problem. Thank you so much.
Sure.
See
Absolutely.
you soon again.
Thank you for having me. My pleasure.
Thank you, and I will see you again.
Okay, very good, Shakil. Good talking to you.
Good talking to you always. And I think today we have more time to talk, but we did not know when the 1 hour has gone. So it's
Yeah,
almost one.
well, it happens. There's a lot to talk about.
Yes. Thank you so much. Thank you so much.
Okay, take care.
Bye
Bye-bye.
bye.